You see, the real problem here is it's all about the business cycle. The business cycle, as you know, ebbs and flows. You can see it on the chart here. It goes up and down, and it's relatively predictable within some boundaries. But what happens is a peaking, booming economy eventually gives way to a recession, and they come along periodically every 4 to 8 years. Now, what's interesting about this expansion is this is the second equal longest expansion in all economic history. And by next month or the month after, this will be the second longest outright. So what that tells you is there is a probability that this expansion has to end at some point. Could it roll on for another couple of years, 2 or 3 years? Of course it could. Could this end up being the longest ever expansion? Of course it can. The point being is the clock is ticking and it's moving towards the next recession. Now, normally that's no big deal, but this time it's a bit different. You see, in recessions, the stock market generally crashes. That's normal. Companies earn less money, investors fear worse outcomes than are expected, and the market sells off massively. And over time, it has had a tendency to recover. Well, again, that's a bit of a recency bias, because all across Europe and other markets around the world, things never did recover. And why didn't they recover versus America? And that's because the Americans have a cult of equity and the Europeans tend to have a cult of bonds. So Europeans basically gave up on the equity market. The structure of the pension system there means that they own much less equities. They're about 70 or 80% in bonds for this particular cohort. The Americans are the opposite. They're about 70% in equity and equity-like instruments. They're taking huge amounts of risk. Now, normally, in America, with this risk-seeking culture, once the equity market falls, the 401k payments come in as everybody's income starts filtering into the stock market and acts as a brake and helps the market rise. The problem is the next recession is going to cross the exact point that the maximum number of people are going into retirement. This has never happened before anywhere. What it means is that all of the life savings that are in equities, which is basically 70% of the entire household balance sheet, is going to get wiped out in one recession. And they won't be able to buy back because they won't have an income to buy back. This is the biggest problem I can see in the world today.